Hello guys and welcome to another brand new episode of the ITU Forex class. In this week's episode, we're going to be talking about how to backtest your Forex trading strategies, okay? So if you've been attending any of the previous ITU Forex classes, you know I'm pretty big on backtesting because without doing a proper backtest, especially a manual backtest of your Forex trading strategy, you're going to find it extremely difficult to stick to that strategy and trade it within the live market during times when it goes through its losing streaks and all of that. Okay, so one of the prerequisites you need to do for you to become a consistently profitable trader who is disciplined is to backtest your trading strategy on historical data to see how it would have performed in the past. Okay, and that's one of the reasons why this class is going to be focusing on exactly how to do that. Okay, so some of you might have heard about backtesting, but you don't know exactly how to do that, and that's what we're going to be talking about in this week's class. So first things first, what in the world is backtesting? So you must have heard about backtesting, but what is it? What exactly is it? So to simplify things for you, backtesting is just a way of testing out your trading strategy on historical data to see how it would have performed in the past. So, for example, if you have a trading strategy that is a moving average trading strategy, and it tells you to buy when there's a moving average crossover, for example, then you're actually going to, let's say, for example, you're using a strategy that uses two moving averages. We have one fast one and one slow one. So when the fast one crosses above the slow one, just like an example we're using here, then you're going to buy whatever trading instrument you're seeing on the you're trading. Or if the fast one crosses below the slow one, then you're actually going to sell that trading instrument. Now, the trick is for you to go back on historical data on the chart to see how if you would have traded with that trading strategy for a particular period of time in the past, whether you would have been profitable using that trading strategy. Okay, so to help you understand this clearer, let's move on to the charts because just doing scribbles here is going to be hard to paint a picture for you about exactly what this looks like. So let's do that. So this is an example of a chart. This is, I think, the 4-hour time frame of the GBP JPY currency pair. So let's just use a fictional trading strategy. Let me add on two moving averages. So the first one is going to be, let's say, a 60 period exponential moving average. Okay, let's just use an exponential moving average. Let's apply it to prices close. Let's color it red, or let's make it a 200 period exponential moving average. So it's kind of a slow one. This is the slow one. Okay, now to make it appear more visible on the charts, let's use a thicker line like this. So this is our 200 period exponential moving average. And for the fast moving average, we're going to be using a second moving average. So to add that, we're going to click on Insert, click on Indicators, click on Trend, and then we're going to go on to moving average again. This is in case you don't know how to add it to your charts. That's why I did it in a step-by-step fashion like this. So the second moving average is going to be a 50 period exponential moving average. And we're going to color this blue. Okay, you can color it whatever color you resonate with. And I'm just going to make this line like the previous one. So it's going to be thick so that it's going to be easy to see on the chart. So once you've keyed in all of your settings, just like I did here, applying it to prices close or whatever you want to use or whatever your trading strategy dictates, then we're going to click on OK. So you can see this is what it's going to look like on the charts. Now, this is the tricky part because the idea is your trading strategy needs to have rules for your trading entry. So what needs to happen before you open a buy trade? And what needs to happen before you close your buy trade? That's when you exit your buy trade. Then the other set of parameters is what needs to happen, what criteria, what needs to happen on the chart for you to open a sell trade or a short trade, and also what needs to happen for you to close that sell trade or that short trade. Whether it's going to be in profits that you're going to close it or in a loss, because obviously I told you when you're trading, not all 100% of the trades you take are going to be winning trades, and that's just the way trading is. Some of your trades are going to be winners and some of your trades are going to be losers. In fact, you don't need to win 100% of the trades you take to become profitable. I have trading strategies which have win rates which are even less than 40%. But because the average profits from the winning trades are much, much, much larger than the average losses from the losing trades, at the end of the day, even though the win rate is very low, I still end up being profitable, okay? So moving on. Let's say you're trading, let's say this particular example trading strategy that we're using, what it does is when the fast moving average, which in this case is the blue moving average, when it crosses below the red moving average, which is what we have here on the chart here, when this happens, then according to the rules of the strategy, we're going to be opening a sell trading position. And let's say for simplicity's sake, just to keep it simple, okay, very, very simple for us to work with. Let's say whenever you enter into your trading position, whether it be a long trade or a sell trade, after the crossover happens, your stop loss is going to be 100 pips away from your trade entry. So if you entered the trade when the crossover happened, which is somewhere around here, so let's say you entered the trade here, your stop loss is going to be 100 pips away from your trade entry. And let's say your take profit is going to be maybe 1:3. So that's your risk to reward ratio. So if you're risking 100 pips, anytime you open a trade, you are aiming to make a profit which is 3 times that amount. In this case, when I pick my calculator to illustrate this for you, let's say we're trading with a 1:3 risk to reward ratio, and you happen to use the trading strategy to take 100 trades. In this particular example, this would mean that every losing trade you have, assuming you've done your position size calculation pretty well, you're going to lose no more than 1% of your trading account capital. And that's 100% is going to be exactly 100 pips. But every trade that brings you profit, that's a winning trade, is going to give you 3 times what you risk. So if you're risking 1%, you're going to make 3 times that amount. You're going to make 3%, which is 300 pips. Okay? So in this case, let's say you take 100 trades and your win rate is only, let's say, 35%. So out of those 100 trades, 35% is the trades you won. So this would mean that you only won 35 trades and you lost 65 trades. So for the 35 trades that you won, each one of them gave you a profit of 3%. So 35 times 3 is going to give you 105% plus 105%, which is your gross profit. What of your loss? Your loss, remember, you risked 1% of your account capital on each trade you took. So whenever you lose one trade, that trade is going to take only minus 1% from your account. So since you lost 65 trades in this example, you would have ended up with a net profit of 105 minus 65, which will give you a net profit of 40%. So even though your win rate is only 35%, you would have still end up making a profit of 40% if you use this plain simple trading strategy. Okay? Now that we understand the math behind this, then we need to go back to what we're talking about today's lesson, which is backtesting. Because if you work out the numbers like this, you actually need to see this perform in real time for you to understand how this would happen. Okay, so for you to backtest your trading strategy, there are multiple ways to do it. Some people just choose to use the very, very simple technique of turning off your auto chart scroll here in MT5 or MT4, turning off both of this here, and then they will drag their charts way back in history. Okay, they'll drag it all the way to the back here, and then when they do that, they'll just keep pressing the F12 button on their keyboard, and then the chart is going to be moving one candle at a time. So watch what happens to this side of the chart when I click on when I press the F12 button on my keyboard. So every time, just watch where my mouse is. Every time I press the F12 button on my keyboard, you can see it's going one candle at a time, one candle at a time, one candle at a time. So in this case, we're going to keep pressing F12, 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 F12 until we see that moving average crossover that we're looking for. Then we'll take a trade and then log the results of that trade. So just watch what happens. F12, we don't have anything. We're not going to take a trade now because we don't have a crossover. We're going to keep pressing F12, and exactly now we have a trade. We have a trade that has occurred here because the blue moving average, which is the fast moving average, has crossed below the red moving average, which is the slow moving average. So in this case, wherever the candle would have closed, which is in this particular example somewhere around here, we'll place our entry, trade entry, short trade entry, because the fast moving average crossed below the slow moving average. So here we're taking a short trade. Okay, so in this case, our trade entry will be at the close of this candle, which is going to be approximately at the at the 197.608 price level. So let's just round the numbers to 196, okay, 0.60. Okay, 196.60. Okay, and click on OK. Then we'll just do this. Now, for the stop loss, remember this simple trading strategy that we just created on the fly in this class is whenever we enter a trade, we are having a fixed risk to reward ratio. So we are risking 100 pips and aiming for 300 pips. We'll just do our position size calculation to make sure that that 100 pips that we're risking is going to be exactly 1% of our trading account capital. So when we do our position size calculator, we'll look for which lot size we are going to be trading so that we don't risk more than 1% of our trading account capital per trade. So in this case, let's assume we've done that. Okay, and so this is our trade entry. So from this trade entry here, okay, to around here, where is going to be 100 pips. So 100 pips is going to be around somewhere here because this is the GBP JPY currency pair. Okay, so it's very volatile. You can see 100 pips will be somewhere around here. Here. Yep. It's going to be somewhere around the price level of 198.60. 198.60. So let's bring another line here and do this. 198.60. 198.60. Okay, so now that let's use the red one for the stop loss and let's use a black one for our let's color this our trade entry to be black. Okay, the black line. And then for our trade exit, which is our take profit, is going to be 300 pips away from our trade entry. So from here to 300 pips is going to be somewhere around here. Somewhere around here. So it's going to be at the 194.60 price level. So bring another line, right click, do this, and then bring this, let's color this green. Okay, 194.60. 194.60, and then click on OK. Okay, and then we'll just click on the line. So now that we've hypothetically taken this trade, now remember we're using the free option of tapping on the F12 button on your keyboard to actually place these trades, to enter into the market with our trading position. Okay, so now that we've entered this trade, because we had a crossover, remember we had a crossover here, this blue moving average crossed below the red one, and that's why we took this trade at the close of the candle, risking 100 pips and aiming for 3 times what we are risking. Now we are going to keep pressing that F12 button on our keyboard to see the outcome of this trade, and you can see that price moved in our favor, but it didn't quite reach our profit target here for this particular trade setup before price reversed against us and hit our stop loss. So this would have been a losing trade. Now you take a pen or a paper or a spreadsheet or whatever you choose to use, and then you log the results of this trade. So you say trade 1, okay, you say trade 1, entry was at this price, stop loss was at this price, take profit was at this price. And so at the end of the trade, the outcome was a losing trade, so we lost minus 1%. And then you are going to continue pressing F12 on your keyboard until you see another trade setup, okay, another crossover. So in this case, this trade would have been a losing trade, okay. You would have logged the trade in your spreadsheet or your notebook or anything like that, and you keep pressing the F12 button on your keyboard until you see another crossover. So I'm just going to press it and hold it so that it's going to move a little bit faster, okay. So we don't have another crossover here, and we're almost going to have a crossover here. We have a crossover here because the blue one has crossed above the red line, okay. So this is our trade entry signal for a long trade. So now we're going to place our trade entry, which is the black line, remember, is going to be at the close of this candle. So the black line, and then our trade entry, let's just say, is at the price level 193, okay. So this is our trade entry. Our stop loss is 100 pips away. Remember, this is just a loose trading strategy that we are using. So 193 minus 100 pips is going to be 192, okay, 192.00, that's 100 pips. So we're going to say 192. This is where our stop loss will be. And our stop loss is the red line. So we're just going to choose this, click on this, and this is our stop loss. And then our take profit is 3 times what we are risking on the trade. So we are risking 100 pips, and we're aiming to make 300 pips. So from 193 to 300 pips is going to be 196. Okay? So we're going to say our take profit is going to be 196. And the color for the take profit is going to be, the line is going to be green, okay. So let's just select green here, and then 196 is the price level, So after we've done all of this, this is assuming that we've taken the trade here. So we are going to continue pressing the F12 button on our keyboard to see the outcome. You can see price just immediately price hit our take profit here, or it barely hit it. So after it hit our take profit, it immediately came crashing down. So this would have been a winning trade. Okay, so let's say we lost one trade, minus 1%, and then the second trade which we won brought in a profit of plus 3%. Okay, that's plus 300 pips. So this is the manual method. If you don't have the money to pay for a premium trading journal, which is going to clean the complete right side of your chart, and then you're just going to be placing trades like you would in a simulator, then this is the alternative method that you can use. Just keep pressing F12. You need to first come up with the rules of your trading strategy. Then after coming up with the rules of your trading strategy, you will now add your indicators to the chart, and then you keep pressing the F12 button on your keyboard, and then anytime you see a setup, you're going to assume that you take that trade, where place a line where your stop loss is going to be, your trade entry is going to be, and your take profit is going to be, and then you're going to keep pressing the F12 button on your keyboard to see how the outcome of that trade would have been, and then you log it in the spreadsheet, and at the end of the day, after taking like 100 or 200 trades or however many trades you want to take using the backtest, you're going to now see the results of your trading strategy. The reason why we are doing this is because we want to see if our trading strategy would have even been profitable, because the problem is that a lot of beginners will just, go and find the trading strategy on YouTube or something, and the person who is showing you that trading strategy, because he's doing it for the views or he's doing it for the money or whatever the case might be, he could tell you that the trading strategy is the best thing since sliced bread. But then you have not tested it. You have not proven to yourself that that strategy actually works. He might be lying and he might not. It might actually do work. But because maybe you have not tested it, when you start losing trades with it, you think it doesn't work and you dump it. And that's not how trading works, because even though I've shown you that we've had a winning trade and a losing trade here, there are times when you can have like 3, 4, 5 losing trades in a row. So does that mean that the trading strategy doesn't work? Of course not. And that's why I keep telling you guys that when you're thinking about trading, don't think about analyzing the results of your trading strategy after taking 1 or 2 or 3 trades, because those could be losing trades based on the losing streak. You should analyze the performance of your trading strategy after taking a large number of trades, ideally something like at least 30 to 100 trades. And then when you do that, you're going to see a pattern. If your trading strategy has an edge in the market, then you're going to make more profits than the losses you would incur if you're trading with a good risk reward ratio and proper risk management, even if you lose more trades than you win. Okay, so you need to test the trading strategy. And the reason why you're doing this is because when you see that you've tested this trading strategy on historical data and you've seen that you've taken like 100 trades, and after taking those 100 trades, even though you lost more trades than you won, or you lost some trades and you won some trades, you still ended up making a profit. So when you go into the markets to trade that trading strategy on a real account with real money, and you encounter 1 or 2 or 3 losing trades, you're not going to start doubting the strategy or saying you're going to dump the strategy for something else, because you know that that's just how the strategy performs. Sometimes the market agrees with it and sometimes it doesn't. But even though you take losing trades, at the end of the day, you still come out being profitable. You just need to stick to the plan. Okay, so this is the first method. This is the manual method that I told you. There are paid tools that you can use, and there are also free tools that make this a lot easier. And this is the second option, which I'm going to show you: how to use a free trading simulator, which is going to make it much easier for you to backtest your trading strategy without actually having to do this tapping F12 button on your keyboard. This tedious process of tapping F12 on your keyboard and then logging the entries of your trades, the results of your trades, using a spreadsheet or a notebook or anything like that. Okay, so let's do that. So for this second method, you need to open your browser or whatever and just type FX Blue Trading Simulator. Okay, it's free. So once you see it, you can see there's one for MT4 and there's one for MT5. You can download both of them depending on the trading platform you want to use. But for this example, let's just download the one for the MT5 platform, okay? So once you've clicked on the results, you're going to see something like this. So if you want to download the simulator for free, click on free download. It's going to ask you to open an account, okay? I think I already have an account with them, so I'm not just, I wouldn't need to open one. I'll just need to quickly log into my account. And then, yep, let's log in. Yep, I have an account with them. I know I have an account with them. So I'm just going to download this. Okay. And yes, I'll download it. And let me show you quickly how to install it. Okay. So once you've downloaded it, just give me a minute to unlock this. Okay. To copy it. So I've started the installer and it's extracting it. I think it's going to ask me for the prompts. Okay. To install it quickly. This is exactly what you need to do. Just search it on Google, click on the results, whether it be for the MT4 version or the MT5 version, and then download it. So now it's showing me all of the MT5 platforms that I have on my PC, okay? So I should select one and just install it on it. So I'm just going to select this particular one, okay? I'm going to select just this particular one, okay? And then we're going to go to install. So it has been installed. Okay. So I think, if I'm not mistaken, I'm going to need to, let me quickly check in my navigator if it's here. And if it's not, then I'm going to have to restart the platform. Okay. So let's see. Yep, it's not showing me the simulator, so let me restart the platform. So I've just restarted it. It's trying to launch right now. So once it launches, I'm going to look for it. Yep, it has restarted. It has successfully restarted. So let me right click here and refresh. Yep, so I've reinstalled it. I installed it in a different platform, and that's why I didn't see it here. But now you can see I've installed it. So we're just going to launch the strategy tester. If you hear strategy tester, and that's what I did, you can see it here. And so this is the simulator. You see it here and click on it, okay? So let's say you wanted to test the GBP JPY currency pair, for example. You select it from here, and let's say your trading strategy uses the 1 hour time frame to identify trade entries and all of that. So now we'll just do for 1 month, so that it's not going to take too much time loading the data, the history and all of that. And then once all of this has been done, I think we'll click on visual mode here. And what else do I need to select? So let me see. Visual mode, yep. I use the MT4 version more, and that's why this is a bit new to me, okay? Yep, now I'm just going to click on start to let it download the history and then open the analyzer for us to place the trades, okay? So that's exactly what I'm going to do. Exactly. You can see now it has loaded the simulator, okay? So it's going to, in a minute when all the data has been downloaded, it's going to start. So the MT5 version of the simulator has been giving me some headache trying to install it and get it working. So I'm just going to use the MT4 version as an example for you, okay? So I've installed MT4 on my platform, and I'm installing now the MT4 version of the simulator on my PC, okay? I showed you how to do that a couple of minutes ago. So now the platform I'm going to be using for this is FPS, and I'll click on install. And just like that, you can see that now it's not here in the Experts Advisor Navigator tab. So I'm just going to right click here and click on refresh. You can see now after the installation, it's here. So what we're going to do next is we're going to come right here, here, to where it says strategy tester, okay? And then I'm going to select the simulator here, okay? FX Blue simulator, and I'm going to the currency pair that I want to backtest. Let's say I'm going to backtest the USD JPY currency pair here. Then I also want it to show me on the charts how it's interacting. So I'm going to increase this window again a little bit, the strategy tester, so that I'll see visual mode here. I'll select this, and then I'll select this, and for the period that we're going to be testing, I'm just going to be doing 1 month. So this is obviously 2025, and I'm going to select 2025 here, and let's just do it from the beginning of March, okay, 1st of March to today. Okay, so it's just 1 month. That's the testing period. And then I've selected everything here, so I'm just going to click on start, and you can see it has opened this window for me. Okay, so now it's trying to download the history which we're going to be using for this simulator. Now everything is going to make sense once it starts loading. Okay, so let's just give it a couple of seconds to finish downloading the history, and then you would understand how all of this is going to come together to work. Okay, so it's telling me the terminal can't load. I need to allow DLL imports. That's easy. Just click on tools, go to options, and then here where you'd see expert, you can see allow automated trading. Yeah, we want to do that. Allow DLL imports. This is what it's asking me for. So I've done that, and I've clicked on OK. I'm going to click on start again, okay, so that it's going to load the terminal. Okay, so before it starts the simulation, it's asking me to log in right now. So I'm just going to do that. Type in my username and password. Okay, so you need to do the same thing with yours. Okay, I think I didn't type in the right password, so let me do that. Very good. So you can see I've done that. After you create your account, that's what you're going to do. So now you see it's the simulator is paused. So let's just click on play. So you see now it's acting up. It's just showing us like this is a real price chart now with price moving. You see price is moving just like a live market, but this is inside the simulator. So you can see here we have visual mode, and we can increase the speed of the simulation, either fast or slow, how the candles are forming. Okay, so let's say your trading strategy, you've already done your trading strategy and everything. Let's just use the example we used earlier on. So let's assume right now, let me pause this. Let's assume now that we've had a crossover here, for example. Let's just say we want to buy. Okay, so if we buy here, you can see how many lots do we want to buy. So let me say we're trading with 0.1 lots. The assumption here is that we've done our position size calculation. So you know how to do that. We've covered that in previous videos. So let's say you've done your position size calculation. You know how many lots you want to trade with, so that you don't risk more than 1% of the account you're trading with, even in the simulation. And that lot size is 0.1. So you type that here. Let's say your stop loss here, you want it to be 100 pips. Okay, so you type 100 here. Your take profit 300 pips. Remember, we're trading with 1:3. I think if this is in points, or this is in points, or if it's in points, it's supposed to be 1,000 points and 3,000 points for this. But if it's not, this is just as an example. Okay, if we're using trailing stop, you type trailing stop for your trading strategy here. We're not using that for this. This is just a simple example. So we're going to click play on the simulation again, and then we'll click on buy. Okay, so I clicked on buy. Yeah, very good. So you can see this is our stop loss. Okay, you see this particular trade has now hit our stop loss here. So let's say we want to buy again, for example. We buy, and then you see this is another trade that has hit our stop loss. Let's sell now. Okay, so you see we've sold this currency pair, and our stop loss is 100 pips. Our take profit is way down here, 300 pips. So you see this is using the simulator, and the simulator is moving here just like you would place a trade in the live markets. So this other option is way easier for you, because after you've done your simulation and you've completed the simulation, you don't need to enter all of the trades you take into a spreadsheet, doing everything manually, and you don't need to do all of that. Okay, after you've done your simulation, you just click on this, and then it's going to show you the results of your performance, okay, of the strategy's performance. So this is another option that I recommend to you for you to test your trading strategies with. Okay, so if you're interested in this, you can go on to do that, and it's going to show you everything here. You see, it's showing you this is the account balance. It was like $10,000 or something. We took 3 trades or something, and we've lost 200. You see, this is our floating margin. Let's say you want to sell again. You just click on sell, 100 pips stop loss, 300 pips take profit. You see, it's showing you the open trade. Okay, it's showing you all of this information. Okay, so this is another way for you to do it. So let's assume that you've finished your simulation. Okay, that's it. You just click on this, and you're golden. Okay, So I hope this clears things up for exactly how to do your back test, how to check the results of your strategy, and all of these things. If it does, and if you have any questions, just drop it in the comment section, okay? Or reach out to us, and we'll gladly set everything up for you, okay? So again, this is one aspect of the ITU Forex class, okay, where we teach you how to trade with trading strategies that are designed to help you become profitable manual traders. But if you want trading bots which would help you to trade on your behalf while you learn how to trade, to do proper risk management for you, to find trading opportunities that are low risk, high probability, while you're out there, you know, in your 9 to 5 or doing all the things you want to do with your time, then we have a particular portion of the company which is designed to do that. We've got bots like the ITU Pro Goldmine, ITU Goldmine, and ITU Goldmine Pro, the ABT, the SBT, and all of that. If you're interested, please reach out to us on the socials or drop a comment here, and we'll gladly walk you through exactly how to set everything up and get them working for you and earning while you're learning, okay? So if you're interested in that, please reach out to us, and we'll be more than happy to assist you set everything up, okay? So once again, thank you for attending, taking time out of your busy schedule to attend this class. I look forward to seeing you guys in next week's edition. Have a wonderful day, and God bless you all. Cheers.